I'm Sidhartha Dash, or Sid Dash, from Chartis Research. Today, uh, we're going to discuss the technology and data in private credit. This is an area where there's been a lot of discussion today. There's been a lot of discussion how banks are restructuring and credit reintermediation. And so with that, I have someone who really knows a lot about this subject, i.e., we have Kanav with us to discuss this. So Kanav, could you please introduce yourself and get going?
Wonderful. Thank you so much, Sidharth, for having me. I'm Kanav, and I have about close to 2 decades of experience in the broader alternative investments or private market space. And all through those, 20 years, I've been helping institutions when they're looking to adopt technology to streamline their front, middle, and back office space. In my current role, I'm leading, client success for Oxane partners, and we're in the business of supporting institutions to helping them leverage technology to really make their investment operations as efficient as possible as they grow in scale while maintaining tighter controls. Good to talk to you, Sid, today.
Great. I am sure we'll parse and deconstruct the market for private credit and its technology ecosystem. So before we even get started, or before we deep dive into the area, private credit is one of those things that's really when you know. So if you could define it, if you could, let's try and think what it is. What is it? Could you sort of give us a definition or sort of a broad perspective of what should we think about? What should we think about when you think about private credit?
Sure, absolutely. So I think you're right. I think Sid, the private credit market has been the talk of the town, I would say, for the last a decade and a half. Especially after the global financial crisis, and sometimes it is used, in multiple connotations, depending upon who are you talking to. Simply, stating sort of, what it really means, it's an umbrella term essentially, right? So which means anytime you see, a loan that's extended to a privately held company, we call it like, private credit. From the point of view of, the lenders, it is essentially looked at about by, a debt that is originated or held by non-bank entities. So that's the plain vanilla definition, in layman terms, what private credit, really means. But if you deep dive a little bit more, as the market is growing, there are, classifications or, other related areas that gets clubbed within the private credit umbrella. So traditionally, it has meant to include what we call direct lending or, cash-based lending. But increasingly, as the market is, trying to enter into the asset-based space, asset-backed lending or asset-backed finance. So, increasingly, you see more and more institutions, who are including the broader asset-backed lending into the private credit, umbrella as well. So, which is basically different from a cash-based lending. And that includes, lending, which is, driven by, or, secured by an asset, or direct collateral. So those are sort of, the two sort of, high level classifications on, what the private credit, area typically means.
But the interesting thing is, whichever way you define it, the whole non-bank space and the whole private credit space has been growing very fast. And the whole credit reintermediation has been changing over time. So what is the driver? What are the main reasons for this growth, if you will?
Right. Yeah, I think it's grown exponentially, since the global financial crisis. There are multiple drivers if you think about it. And for both sides of the equation. So, there are drivers from an investor's point of view, and there are key drivers when you look at, from a borrower's point of view, which are, the middle market companies. The market view, of course, is, the private space, or the private credit institutions, they have stepped in to fill in the void that was left by the banks, after the global financial crisis, as as the rules were tightened, from a capital adequacy point of view. From an investor's point of view, what it really means is they have an additional avenue for earning higher yields, because of, the illiquidity, which is inherent within the private space. Historically, what the investors have seen is, the correlation to losses arising, from the private space. So that have been traditionally been, low as well. And it offers them, an additional avenue for diversification. So there's sort of, a high yield expectation, more diversification that the investors are looking at. So it's, it's natural for the investors to really look at it as an investment, as a newer asset class, which is, gaining a lot of interest from them. Now, think from a borrower's point of view, they are also, I think, gaining a lot with the growth in the private credit, because, as banks are retrenching, the growth or the lending, the private credit is, coming to fill that gap. And from a borrower's perspective, they have a very, they have a lot more flexibility in the terms that they get to, from the private credit lenders. The speed of execution is, a lot faster. And, even if, let's say, the conditions are particularly challenging, you can really structure the transaction in a very unique way or an innovative way. So, it's kind of, win-win for both the borrowers who are in the need, as well as, the investors. So you see sort of, both sides of the equation really adding to the growth, which is why, the market is really grown tremendously after the global financial crisis, upwards of, $1 trillion, when you look at only the direct lending, and upwards of 5 trillion when you talk about, asset-based lending.
Great. I mean, obviously, this restructuring of the credit market has obviously benefits, as you outlined, for the investors, from diversification, greater returns, and from the borrowers with flexibility and more choice. However, how do you think, what are the operational challenges? I mean, whenever a market grows this fast, there are bound to be, challenges and sort of, dirt in the wheels and the engines that run the system. So what do you think are the operational or otherwise, both operational and analytical issues in the market, if you will?
Right. So, if you think about it, I think, the unique characteristics, Sidhartha, of the private transactions or private credit, is the illiquidity, right? That exists, within the trade. And that obviously is, because, these transactions are not traded. Now that unique characteristics, works to the advantage, when you are doing the trade, the market is growing, but it also, means that, there are increasingly more and more challenges as you scale up. So think of it as, you are, you're in the space, as a private credit fund, and you have a handful of transactions, right? So it's easy for you to manage that, even if you don't have the infrastructure set up, right? But if your idea is to really, grow this, as you start to scale up, as you close, more and more transactions, the challenges grow multifold, right? So that's where, it becomes really, a key bottleneck for you to grow your book while still maintaining, tighter controls that you would expect, right? From an institution, from a risk point of view, from a governance point of view. Now, those challenges are not easy to solve. And I think the biggest reason is, since this market is pretty new, so it hasn't been around for more than 15 years, right? It's grown after the global financial crisis. And, because of the way the market is structured, the biggest challenge that we see is, around data, which is highly unstructured. It is in, varied format, because a lot of these transactions are like, bilateral transactions. It's difficult for the institutions to ingest the information, run the analysis. So if you don't have the right infrastructure in place, you will face a lot of challenges in scaling up the business, scaling up the book, while maintaining, tighter controls internally.
Clearly, data, people, process, all of this is a structural challenge as you move from being ad hoc cottage industry businesses to a scalable financial institution, to a scalable financial institution, if you will. Now, in terms of technology, I mean, where do you see applications of technology? I mean, there's some obvious ones, workflow, etc. But overall, where do you see applications of technology to mitigate some of these operational challenges that you outlined?
Absolutely. So, I'll talk to you about sort of the ideal picture or the ideal scenario on where technology can play a role, and then a little bit more realistic scenario, I would say. I mean, ideally speaking, you just compare this to a capital markets world, right? So where you have like straight through processing, and right from the time when the transaction is originated until the time it's exited, it's all like straight through, run by technology. So in as a parallel to that, you would ideally want a technology that cuts across the entire spectrum or the entire life cycle of a trade from cradle to grave, as we call it. So when you're looking at a transaction, from an origination point of view, when you're underwriting a trade, when you are closing a transaction, looking for managing the trade, to running risk analysis, to reporting onto the transaction for both investors as well as regulators, to performing valuations. So the entire value chain, right? So ideally, you would want, as an investor, as a fund, in the private credit space, to run this seamlessly using technology, right? But that's easier said than done, because because again, the complexities that we spoke about earlier, the unstructured set of information, even from one transaction to another, even within the same investment strategy, right? It's not a very homogeneous. So it's very, very difficult for you to have like straight through processing. But I think we're starting to see where more and more technology ecosystems are being built to solve the core, because as the market is growing, there is an abundant need to fill that gap, which is what we are calling like a digital frontier. So it's not just about a single technology ecosystem, or a single solution catering to just one particular aspect of the trade. It's about an entire ecosystem, a mindset where you lay down the basic foundational grounds of the technology infrastructure to support it right through and through. The most important ones that we've seen, which are, if you were to say, let's say, pick up the ones which are like the priority, the ones that immediately our private credit fund looks for, are that relates to portfolio management or risk management. Those are the ones where you've closed a transaction, but you still want to maintain controls, as there is volatility in the market, to be able to report and them accurately. So those are, I think, one of the big challenges, where our priority, I would say, from portfolio and risk management, our reporting technology perspective. And we're seeing more and more institutions going for that adoption, at least that particular segment of the entire ecosystem.
So, Kanav, that really brings me to my final question. How do you really think the market's going to evolve? I mean, what are the big three things that you see changing as the market evolves operationally, from a market structure standpoint, uh, and from a sort of overarching business framework standpoint? Where do you see the market structure and markets in a few years from now?
Absolutely. So I think the way we see the market, Sidhartha, there's consensus, I would say, that the market is going to continue to grow. There's so much more room for growth within the private space, and undoubtedly you see this by the fact that there's so much fundraising going on in the private space. So we anticipate that this will continue to grow in the coming years. At least the next 5 to 7 years, as firms deploy more and more. With this new sort of capital that needs to be deployed, there will of course be sort of more competition in the market, which means that the other key aspect is you would start to see more and more institutions leveraging upon, or at least prioritizing the use of data and technology within the space. So that would become a key differentiation factor, right? As more and more players are entering the market. So that will become like your essentially your USP to leverage upon the information that you're sitting on, the kind of technology systems that are setting that you're using. That becomes like a key driving factor for you to really take on the competition that's driving. Another thing that we see, again, more from a service providers point of view, is so far I think there's still a big kind of a gap in the market, if you think about, from purely from a service provider's point of view. So, there have been systems out there that have been there for quite a few decades, right, which have been supporting the tremendous growth that the capital markets have, seen, in the last, 40, 50 years. Now, what's really happening in the private space is, quite a few of, those solutions are being used to really align to the private space. So that we believe, is a big challenge, because what they're trying to do is, fit like a square peg in a round hole, right? So the systems that have already been in use, successfully used, I would say, in the capital market space, and now they're trying to replicate them, into the private space. Now that we believe, is an issue, is a big issue, and that I think that will reflect more and more, as you start to see the market grow. We believe, this market needs its own sort of technology systems which have been grown ground up for the private markets, rather than really taking on a system which has been there forever and really realigning it or reconfiguring it, to align it to the space. So that is another trend that we see, more and more technology service providers, coming to the fore, who are not having the baggage of running like a historical, or an antiquated system, and building something new to address the gaps that are in the market. So those, I would say, would be the trends that we anticipate in the markets to come. But all in all, I think, it's going to be like an interesting, few years, as we continue to see more and more momentum in the markets.
Of course, in some ways, the process of continued growth from the banks to other balance sheets will, I guess, continue. And as you rightly said, I think the industry is moving towards maturity and perhaps requires specific and targeted technology. So with that, thank you, Kanav. And we come to a close for our session on private credit and its sort of growth and then the maturity path and the drivers that we have seen there today. Thank you.
Absolutely. Pleasure to talk to you always, Sid. Thank you so much for having me. Bye.